Hello, 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 everyone. Mike Arnold here, co-founder Path Trading Partners, along with Bob Iacchino, who's not quite here yet. How's everyone doing? Did you the Rip Your Face Off rally? I renamed it the Steal Your Face. The Steal Your Face rally. It's our new term. We're going with the dead theme. That's why I had to put on the shirt. The Steal Your Face. The Steal Your Face rally. I had to change shirts specifically for everyone here. How is everyone doing? Hey, Waka Waka. Crazy rally. It was very low volume. A lot of short squeeze today. A lot of short squeeze. You got to pay attention to the technicals, though. That's why I keep telling you can't pay attention to the. We review the numbers, but you got to pay attention to the technicals, and you'll get these kind of rallies. Crazy market, but makes no sense with everything going on and Fed being hawkish. Feels like a rug pull. Oh, we'll roll over again, but you got to have these rallies. Also, remember, what's next week? What is next week? Besides in the U.S. here, Memorial Day on Monday. But what is next week? And by the way, trading hours are stock markets closed. Futures are cut back on the hours. Waka Waka, it went straight through your target. It went to some of my targets. Went straight through your target. Hey, George, about time. You guys should have been prepared for the rally. Cycle's turning up. Well, what's next week, though? End of month. You still can get some more end of month window dressing going on. We can still get some more upside pressure. Even if we get like maybe a pullback tomorrow, we could pick up on Tuesday with another push higher for window dressing. We will have to see. You get also these kind of moves at the end of the month, and the technicals said we should get there. And yesterday was the weak sauce rally, and now it was the rip your face rally. Here comes Bob. Let me keep going with this. I'll get Bob on in a minute. What's up, Mike, Bob, and crew? What an epic move from the weak sauce showing from yesterday. Seems like we're out of oversold territory. Oh, it's definitely out of oversold. Rich, what a joke. This market should crash. Those rallies are ridiculous. The market should. What do you mean the market should crash? Oh, I think Bob might have a talk about some of this. This is usually the resistance where the market dumps, so we'll have to see. Long weekend, what's going on makes no sense to go long. You also have end of month. You're in negative gamma territory, low volume. What was interesting, I know Bob will probably have some comments on the bad showing of the GDP numbers, the PCE stuff today. Pending home sales were a disaster. Kansas City Fed came in a bit stronger than I had thought it would, but down from prior. Keep in mind for tomorrow, we have all the core PCE, all the big PCE, the Fed's favorite numbers tomorrow, and then we got consumer sentiment for May, the final count. So we could see some interesting price action tomorrow morning. Before I get to Bob, if you are new here, please consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers, leave some comments like you've been doing. Help us get wider circulation. I know we're getting new people on this live stream, so we are growing. Subscribers are going up, so everyone is doing a fantastic job with that. Don't get too one side. That's why I'm saying you got to analyze both sides and be prepared for this. If we trigger the double on the S&P, I'll drive my boat up to Amit's cruise and give him a high five. Amit's back on land. He's back on land, right? Seems like the Fed mission is to get inflation under control. If so, can the market move any higher? Sure. The market can do a lot of stuff. Remember, there were some rip your face off rallies on the last major bear markets. A lot of them. All right. Let's get Bob on here. I know Bob will have some comments. Just a smile? That's all. You don't have any comments. You're just going to sit there and smile.
I need everyone to tell me what they did today so I can follow what they do.
They bought. They bought a lot.
I love they.
They bought. Look.
You know, they always know what they are doing.
They do. And look, they also went into the mega caps. They poured into Tesla. The options were going nuts today. So that was... but I would have hated to be a little red stock today. How disappointing would that be? Oh, well, the little red stock. So What are your thoughts on what they're going to do tomorrow and everything else, Bob? We got PCEs coming out tomorrow and consumer sentiment.
So the reaction to the GDP revision tells me that the reaction to the PCE, unless it's dramatic, wouldn't likely be much. I suspect, given what happened with GDP, that it's likely to be a little hot. But it's April. It's April data. So we could see a little bit of a move off. And if we see a little bit of a move off, tomorrow is likely to be a rally either way, is what I'm saying. If we see a little bit of a lighter PCE, they will rally off of that. If we see a little bit a little bit hotter of a PCE, it's gotten to the point where the market kind of is reacting to data as if it's made its mind up of what the Fed's plan is, which brings me to what Amit put in as you were talking about the Fed's plan. So one thing I know, Amit, about the Fed's plan that you saw in the minutes, their mission to get inflation under control, is that mission changes. They call themselves data dependent. I would say they're data and politically dependent, but now that Jerome Powell is renominated and reconfirmed, that's likely to take a bit of a backseat. What I think is happening now, and let me go through why I think it has a lot to do with what's going on with yields, right? Yields are just weakening, and the curve's steepening, but yields are weakening across the board, right? So when you see this, and this is something we talked about when looking at the chart, right? That the yields were probably going to move lower, so the yield contract moving higher, or the Treasury contract moving higher. Wait a minute, yield smaller, moving higher. It's one of those things to me where the market believes that there's a slowdown coming, which is what we've been talking about. I'm in the recession camp, and the market believes not only that there's a slowdown coming, potentially a recession, but that it's going to be enough to back the Fed off and potentially to ease back inflation. The part about it that I maintain is that it's not going to be enough. So when I talked about a medium-term bottom in equities, that we'd have a medium-term bottom, it was based off that theory. It wasn't based off price action. That's why I wasn't calling a bottom yet. I was saying I think we're due for a medium-term bottom, because the fundamental or the macroeconomic theory for me is that we're going to start getting slowing data, and then the market's going to believe that's going to ease the Fed off the tightening gas pedal, I guess you would call it. And I suspect it will. I think they're committed to these 250 basis point rate hikes. I think that those are baked in now. And remember, the stock market trades the future, and it's not really trading a severe recession. It's trading like it believes that the Fed's going to do two more and then back off. So it really depends on what kind of pressure the Fed comes under. Also, after the second rate hike, we'll be approaching midterms. So I suspect we'll get a lot of talk of how inflation has abated. It will not have abated, just the rate of change will have gone a little lower because of base effects. Does everybody know what base effects is? No, Mike, have you ever talked about base effects on inflation?
I haven't.
All right, so inflation, CPI is a number, right? I think the last CPI was somewhere around 291 or something. It's an aggregate index. And that index, what we read when it says up 7.9 or 8.1, that's an 8.1% increase in that base number. So when it goes parabolic, like CPI did, okay, when it tapers off a little bit, the increase will shrink, but it will still increase. That's a base effect. Okay, so if it goes from 291 to 300, right, that'd be like a 5% move approximately. I'm probably wrong on that math, but if it goes from 291 to 292, it's still increasing, but because the number's so high in the first place, it comes off a little bit, right? The reading that we get seems lower. but the higher prices stay. CPI is not going to go negative, in my opinion. It's not going to turn down to where prices readjust and go lower, especially in energy in the short term. So I think the market is trading a less aggressive Fed, Amit, even though they definitely said, if you look at the minutes of the meeting said the 50 basis point hike was unanimous, and that most participants saw 2 more 50 basis point rate hikes as appropriate. Most, not all. The 50 basis point was unanimous. By the time the July meeting comes, it might be none of them. It could legitimately be none of them. I maintain they're going to do the 250 basis point hikes, but by the time that meeting comes around, they could say, you know what, inflation's starting to slow. We're only going to do 25 here. They might. I think that's what stocks are kind of looking for and preparing for.
Are we going to get their softish landing?
No, we're not. We're not. I mean, if you believe a recession, which I do, that's not a soft landing. I guess a mild recession could be softish. Could be one of those bad plane landings where you bounce around, you hit your head on the luggage rack, but you don't die. I guess that's what that could be.
That goes from hitting your head to death is a big gap.
It's a big leap.
That's
If death were a 10-year depression, I suspect we're going to have multiple head injuries on landing.
okay. Mike, on ES Futures, we have a bigger double, but notice there was a smaller double. This was not a smaller double. The only one we still had with the smaller double was the Nasdaq, which bounced off the first target today. The S&P did not have a smaller double. It's only the bigger double. This side, the right-hand side, did not go low enough. Rich, Mike, we can't wait to see the bottom. Can't wait forever. Life is short. There you go, Bob. They went all in.
Life short.
No bid was left untouched. I think we could rally, consolidate until Q2 earning reports as next catalyst lower. I don't think we'll make it all the way to Q2 without another pretty decent rollover move. I think after we get through this month end and begin first little bit in June, we could see another push lower, but I need a signal. Remember, cycles on the weekly are finally turning up, daily turning up, and now getting to the top unless we do trigger this a bigger double pattern. But this is all, so far, all we've done is we rallied up, we hit the 87.5 to 100 area, we hit the other side of the rotation zone, and didn't close above the rotation zone, interestingly enough. So this, so far, I mean, this is just a normal short-term rally within a bigger term context of the bear market. Let's see. By the way, I did want to point out volume. Volume. Here you go. I mean, we talked yesterday about how the sell-off's a higher volume, but look at this volume today. It was pathetic.
Yeah, that's garbage.
This was a rally. There were like nobody's willing to sell at this point. It was just like, I'll sell it. You know what? Let it go higher because I'm going to sell it back higher, or I'm going to put on my shorts higher. It was like, everyone, if you want to buy, go ahead, but I'm not selling here. I'll sell after you're done buying. That was so that's where we sit. Bob, you thinking the market is front running the Fed? If we won't EPS go down and market goes lower if the inflation? Hold on, Bob. So you're thinking that the market is front running the Fed? If we have slowdown, then inflation goes down, then Fed backs off. Won't EPS go down and the market goes lower?
Why would EPS go down? I mean, if we go into a recession, sure.
And if we keep inflation, though, earnings per share could keep ratcheting down with inflationary pressure on earnings.
Okay, so Amit, you basically just spelled out why I think the downside's not over yet, right? This is what I've been saying. Like, first of all, you have to understand that I don't think this is all going to happen tomorrow, all at the same time, right? So we've already got, what do we got? 5 out of 7 days higher now. Is that a daily chart, Mike?
Yeah.
This is the first 2 in a row up day in the S&P since the beginning of May, right? Yep. So I don't think this stuff's going to happen all at once, which is why I said I think we got a medium term bottom, and I think it can be as much as 18 to 21% higher. Originally, I said even more than that until Mike did some measurements, right? So from that perspective, yes, stocks should go lower, right? But not till it all plays out. So the way that it plays out is the Fed continues to do 50 basis points. They do another one in June. They talk about doing another one in July. Market participants start to think that those might be the last ones. They then start to think that maybe they'll do 25 in July and not 50. The 50 in June is happening. And then stocks continue to go higher. And then earnings start coming out, or even worse, inflation data stabilizes at plus 4.5%, plus 5%, plus 6%. And EPS gets wrecked, and then stocks go back lower. Remember that I've said through all of these that the downside is not over. It's why I'm calling it a medium-term bottom, not an end of the bear market. Right now, I could fairly say that the S&P is in a bear market as well, because SPX and ES both dropped below 20% from the all-time high, but they didn't close there. And we deal in closes for most everything. So I'm going to stick with that and say that the S&P hasn't gone into a bear market yet. But the Nasdaq's not going to be out of the bear market for quite a lot of points, nor is the Russell. And I still suspect those are going to drag it down. So think about it in stages, Amit, as opposed to all at once, right? First things first, we get a medium-term bottom because market believes the Fed's going to back off. Second thing is we get a little bit of an abating of the rate of change of inflation, slightly lower, but still high, still way above 2%. Then we get inflation starting to hurt earnings badly. And yes, the EPS gets hurt because stocks have readjusted back up and they start to come back off. And the Fed says the supply chain has to help, and the supply chain doesn't help. And it just gets worse and worse from there. Does that make sense?
Makes sense to me. And again, we can't trade what we think. We got to trade the patterns and the technicals and everything else. Because look, if there's a major short pattern at traders, then we go short again. If this other bigger double triggers, which is still valid, could we see 42.84? Yeah, we could. You got to trade what is, not what you think, because trading what you think will get you crushed, especially when you get on one side too much. Like I'm so bearish, it's got to keep going down. And these are the kind of moves that just crush the bears because they think the market's got to be like back at 3,000 tomorrow, but it doesn't.
Right.
What was
I want
that?
to make sure Amit responds, Mike, because I want to make sure he understands the stages of this, and also that I'm not telling anyone to buy this necessarily. Right, I trade price action. He responded. Okay.
Yes. Hey, Lauren. Hey, NASCAR. All glad you're here. Dow would have to drop 1,370 points tomorrow to close this week red. I don't think this week is closed red. Finally, we're getting the little relief rally. Rich asks how Japan's CPI will affect U.S. dollar JPY.
Oh, I'm sorry. Was that for me?
Yes. How Japan's CPI will affect the U.S. dollar JPY.
Well, not much at all, to be honest, Rich, because Japan's not changing their stance at all. The Japanese yen is lower unless it's flight to safety, basically, period. The only way that the Japanese yen gains any ground at all is if the Fed backs off and the ECB backs off and everybody else backs off. So from that perspective, the Bank of Japan has basically said, no, this is what we're doing. We're continuing with monetary stimulus, period. End of statement. Doesn't really matter. So not a whole lot, Rich. It's more to do what happens with the other central banks than anything.
And we have hit the first and second targets on that double.
Right. I would look at the charts.
I mean, this thing could make easily another push lower back to the 50-day, which is the final target for the double.
Mm-hmm.
So that's, and we finally corrected to the weekly rotation zone. Could it still go lower beyond that? Yeah. But did you know you gotta follow your charts.
Mm-hmm.
If I tried to interpret everything and then plan what the market was going to do based off just economic releases and Fed speak and everything else, I'd be a disaster.
Mm-hmm.
Wouldn't you? Well, you'd be like,
Yeah.
because you can't
Yeah.
trade what you think should happen. You got to trade what is happening.
Right. I mean, one of the things I really like about coming in here is you guys are really good about saying nice call, Bob. But guess what? I didn't trade this stuff. I'm just telling you what I think. I mean, unless there's price action, I'm not in a trade.
Michael, thank you for being here. I see you removed the second trend line on the sleeper slope. I think we could come back down to test that old trend line and bounce. That would just be kiss the trend line goodbye.
Mhm.
If this
Mhm.
is the one that I had off because I was trying to declutter a little bit. Yeah, that could easily happen. We could pull back and then make another push higher. Again, every day does not have to be up, just like every day doesn't have to be down. Uh, Interesting enough is we completed above that 62 and a half before I reversed the harmonics. We completed into that zone, the 87 to 100, and now we could theoretically see a pause tomorrow and a slight little pullback. So that would be an area I'd watch, the definite concept of kissing the trend line goodbye with this significant level, and you could do some harmonics there. Let's see. Where do we sit? 4 hour on Nasdaq looking to make a double top. 4 hour on Nasdaq. On which one? I don't have a double top here. Unless you get way down to that's not even a double on that time frame. I don't have a double top. It just came up to the longer term trend line, the first target on this double bottom, and pausing there. So that's nicely completed for the first target on that. So again, could this pull back and then push higher to complete the whole pattern? Yes, it could very well easily, and that's what I expect going into next week. We'll go over that at some point. Just not today with Bob here. I want to get Bob. Don't you think tomorrow data, if worse than expected, will tank the market, especially with a long weekend?
I mean, sure, it could, but I don't think worse than expected data would be the reason. I think the long weekend would be more the reason. Look, there's not a lot of geopolitics going on. You have to say long weekends have more to do with geopolitics than economic data. Okay, people don't, it's not like before where we got out of positions because there was a long weekend and you couldn't trade, right? And there's no real risk geopolitically. I guess Russia could lob a small impact nuke, and that would cause a problem. But if you look at the volume that Mike just showed you, who's really getting out of stuff, right? I suspect a long weekend would be more of a rally than a sell-off. Shorts having watched the last three of the last 4 days go higher, and then we got a long weekend coming. They might want to get out of some shorts. But really bad data, you guys got to understand, like if you think about what the market is telling you, price action tells you what's going on behind the market. Okay. Basically, what's a good example for this? Price action is kind of like tight clothing. Okay. Which I wear a lot of. You can see what's happening underneath the tight clothing. You can't see what's happening under the loose clothing. Fundamental analysis is loose clothing. Okay. What we're seeing in the price action right now is the pressure to the downside is being released a little bit. And you combine that with the data that we're seeing, which is slowing data, look at the GDP price index from today. It's higher than expected. The price index was 1/10 higher than expected on GDP. Didn't move the needle. So it would have to be a really bad PCE number, really bad. And I suspect that that's not going to happen, but it could. It certainly could. We've got the trend line there that the market could fail against. It could easily happen. But I'm just saying the data itself is starting to be talked about with people I talk to, and with some of the people that interview me and the questions that they ask. They're all talking about peak inflation, and they're wrong from a perspective of the base level of inflation, the index itself. But they could be right that we've reached the peak rate of change. And that will get people to potentially buy. Even people want to buy the dip. They think they're buying stocks on sale. And in theory, depending on their hold time, they are. Right? So I wouldn't necessarily be confused if tomorrow we get a little bit hotter PCE data and the market just doesn't collapse. Right? It just kind of doesn't go much higher, because there's not a lot of volume before long weekends, because people are not likely to put on new positions. If we're seeing position squaring before the long weekend, it's likely the market was higher, not lower.
Hey, Dr. Michael, welcome. Bob, any further from this other Michael Jones? Bob, any further indication of debt or credit stress?
I will tell you that credit card balances are going up. Delinquencies are going up on loans. That's consumer. I know that's not necessarily what you're asking me. Institutional credit stress, I'm not seeing a lot of it yet, but I'm starting to see consumer credit stress. Now, Macy's numbers, I believe, were good, right, Mike? Macy's had really good
Macy's,
numbers.
Dollar Tree, and Dollar General all were good. And Ulta, that was earnings after. They guided really strong. I mean, look at this. They're back over 400 from closing at 377, and a couple days ago they were down below 340.
Yeah, look, I want to sell the shit out of that. And I'll tell you why. So this is Macy's, Ulta, not so much Dollar General, but I talked about Dollar General before, saying that Walmart's loss could be Dollar General's gain, right? We talked about that a couple of weeks ago. Ulta and Macy's are going out kind of stores. Target and Walmart and Amazon are staying in kind of stores. And after basically 2 years of restrictions and summer hitting, the stores that people would go out to are doing better, and the stores that dominate online are doing worse. That's the narrative after seeing this. I wasn't predicting that. So therefore, I wasn't in a trade based on it. By the way, I did do a non-technical trade this week. I bought 114 calls, July crude oil, 114 calls. Paid $320 for them, and I believe they expired third week of June. They've almost doubled already. I bought those 2 days ago. And it was really something that I did not intend to risk the whole $3.20. I just wanted to play the channel without actually being in that crazy ass crude oil contract. So very wide markets on those in the futures right now. They're wider than they should be, I think, but still it was worth it. I just put a bid in and I didn't think I would get them, and I got them. So probably exit those toward the top of the channel unless we get a breakout. Yeah. If crude oil can run along that channel and get above the top of the sideways channel, which is basically that high in March, I mean, get above that while it's touching the top of the channel, then I'll look for a retest and a move back up, and I'll stay in them. But
you can also, that's a 62.5 harmonic. We get a close above that, and statistically it favors a return to possibly 125. I mean, we could see it in China. I mean, this crude's held up remarkably well, even with China, like the reduced demand with China. So bring China back online, summer driving season. And I think also people aren't dialing back because of the lockdowns for 2 years. Hey, this is the first summer without masks and everything else around here. Everybody's like full party mode. Like, I don't care. I don't care if gas is $6 a gallon. I'm paying it right now for the summer because I want to go places.
Right.
Then you get to the fall and they're going to be like, oh, crap, now I got to pay for all my credit cards.
What harmonic is in between the 62.5? Oh, wait a minute.
That's the 62.5.
And what's right above that?
What's right? Then we have the projection harmonic, 1/8,
And one more. I'm sorry. One more.
and then above that, that's a 75, and then we have a harmonic cluster at 121.17.
Okay.
So
I actually,
if we
that's
break
where I
above
put
this
my
channel,
target.
that's my intermediate term target on a close above the 62.5 is right here.
That's where I put my target on an interview that I did Tuesday morning. I put it at 121 actually. So, but I didn't remember why. I just remembered it was a 121 handle. And when you said 124, I was like, shit, I think I used the wrong target.
No, and this is the intermediate term. That's the longer term.
Okay, gotcha.
Intermediate term, I target on a close above the 62.5. The next logical harmonic is a 75. And we have the projection harmonic from the lows back on the 11th of April to the pausing bar on the 17th of May. That gives you the 25% harmonic. So you got a really nice cluster there, which is a fantastic target. Which is why it's great to have targets, because you can map out your trades then. It's what we
Yeah,
talked
that's the
about.
thing. Like, and with the options, it's a little more complicated for me because obviously volatility has quite a bit to do with what price is achieved, and volatility and time decay has quite a bit to do with what price is achieved if it goes your way. So I just look at the futures and I say, okay, if it gets to 121 anytime soon, I'm going to be more than double, and that's plenty on this particular trade. So on options, personally, I end up doing reward to risk in arrears simply because I'm not as good at options as I am at other things. So
Amit Super Chat, thank you so much. The macro coupled with all these eye-opening techniques, doubles, harmonics, scan levels, and patience and of probabilities has really improved my P&L. Thank you both. Well, very glad. That's why we are here.
yeah, that's great to read.
And this is just you learn these things over time. It's why we teach them, because they actually work and they help you get a roadmap. Like if somebody was asking me without these levels, what are your targets on crude? I don't know, but I have, because we actually have stuff that works.
Yep.
And it's great because it does a guarantee. No, but you can literally go into a trade knowing I have a roadmap. It's like going on a road trip with a map. You can map out, I'm driving 8 hours and I know where I'm stopping for my hotel tonight. Whereas if you don't have the map and you don't have GPS, you don't have anything, you're just jumping in a car, who knows?
Price action is like a reliable car. It doesn't start every time, but it mostly starts.
I'll take a look at that once we're done with Bob. Hold on. India wheat export ban stays despite G7 pressure. Bob with the great analogies with his tight shirts. The tight shirt. At least you're wearing a shirt, so thank you, Bob.
That's not a frequent event down here in Florida for me, but I wear it for you, Mikey.
Thank you. I appreciate that. But buying the dip would be counterintuitive to the Fed. That means too much liquidity.
I'm not sure what that means, but I'll tell you what. Dip buyers don't care what's the Fed's doing necessarily. Everybody I know personally that's just always looking for a dip to buy just texts me and says, is this the bottom? They don't ask me why I might think it is or not.
Do they even ask you the time frame on the bottom? Because there's different time frame bottoms. I mean, you could have like the very short term. You could have the medium term. You could have a potential bear market bottom, which is very different than a 1 week bottom.
Right. So it's just one of those things. It's like when you say it'd be counterintuitive to the Fed, again, you read the minutes. I get what you're saying, but the minutes are already a month old. All right. And we've had data that has showed inflation isn't under control yet, but we've also had a lot of data that shows we might be slowing. Home sales are cratering, absolutely cratering. Here, look at this. I don't think you guys will be able to see this, Mike. I should have saved it and sent it to you. These are global PMIs for April. Okay. You could see all the lines there, but don't worry about that. I don't know if you can see the data on here. We've got 2 countries manufacturing PMIs in April that are in contraction territory.
China's in contraction. Russia's in contraction.
Right. Now, China and Russia, China has zero COVID policy, and Russia has sanctions. But United States was 58.2. They fell in their May figures. UK was 55.8. They fell to the 51 range. Brazil was at 51.8. They fell below 50. Eurozone was at 55. They fell into the 54s. They're all on a downward trajectory. PMIs are a leading indicator. Jobs are a lagging indicator. Okay. GDP and things like that, PCE data that we're getting tomorrow is for April. It's for the last quarter. Okay, so when you start seeing other things play in from an economic standpoint, you could say, okay, I know we just got strong PCE, but that was April, and we're seeing lower PMIs, we're seeing lower new orders, things like that start to price into the market psyche. And I'm telling you, what they are thinking right now is that the Fed is going to back off sooner than these last minutes said they would. So take those minutes with a grain of salt. The Fed is definitely, they say it also that they're data dependent, and the data's coming out weaker.
All right, let's see. Anything else? Michael says, thanks, Bob. Both consumer and corporate is helpful for the debt question. I would be shocked, Sterling, if the markets aren't significantly higher leading into the midterms, including stopping the unwinding of the balance sheet and rate reductions if necessary. Politics rules.
Well, remember who rules politics in this particular cycle. It's the left. So if you think the politics rule, and markets should be substantially higher before the midterms, there should be pressure on Powell from the current administration to slow down, which would spike the markets. I mean, I'm not saying that we won't come out of a bear market from that. I feel very strongly about that, but all right. Anything else for me, guys?
Anything else?
My wife went back to work, so I have to cook for her now.
You're cooking?
I got to cook. She went back to work.
What do you
She
have?
took 2 years off after the pandemic, and now she went back to work.
What are you having for dinner?
I don't know yet. I was thinking maybe buffalo burgers.
Buffalo burgers. Will they fit on the grill?
They're not Brontosaurus burgers.
Okay, Fred Flintstone. I'm not. Danny, can you put the question in here instead? I can't check the Facebook right now without switching stuff around. Thank you, Bob, for today's clarification. It's a lucky man who gets to cook for his wife. Bob the baker is back in action. Look at this.
Back in action.
Back in action.
I didn't show you guys what I made.
What'd you make?
I made an apple pie with cinnamon rolls for the top part of the crust. Can you see this?
Look at that.
Is it too bright?
Yeah, I see it. Look at that.
So that's before the oven, and then this is after the oven.
Ooh. Wow, wow.
And then I made the frosting. Yeah, I deleted the frosting picture.
You deleted the frosting?
But I made the frost. Yeah, I made the cream cheese frosting, or the topping that you get on cinnamon rolls, and I covered it with it.
This says, there it is. There it is. All right. Well, thank you for being here, Bob.
Yep, happy to be here, guys.
All right. I guess we'll talk to you next Tuesday, unless something shocking with PCE and you want to jump on tomorrow, but I'm not expecting it. But I guess if something's completely off, you might jump on.
Yeah, I got a pretty important call at 9:30 tomorrow Eastern time, so you're on before that, right?
I'm on at 9 Eastern.
9 Eastern. Okay. Something happens, I'll jump on.
You're going to make Rich sick. He hates apple pies.
Sorry, Rich.
All right.
Sorry about that.
Talk to everyone.
Actually, my favorite pie is cherry, but nobody likes cherry.
Sweet cherry pie?
I love cherry pie, but I have a couple of friends, 2 guys, and they're married to each other. And the one guy actually said to me, he goes, apple pie, I hate soft fruit. And everybody burst out laughing. I guess it was a homosexual joke. I don't know. Michael loves cherry pie, but Rich likes it. All right, I'll make a cherry then. Mike, can you send me a screenshot of your crude oil chart with the harmonics on there, please?
Yep. Okay.
Just email it to me when you have time.
Yep, I will. All right.
All right, cheers, guys.
All right, everyone. Little Mike is back. Yeah, gap, and down. Gap, and down. So let's see where else we sit. Let's just do a quick review of stuff for overnight. I'm now just watching this pullback. I'm focusing on about the 1 hour rotation zone. My first level is about 40.40, and then if we get the bigger pullback, I'm at about 4,000, 4,007. Area I don't want to see it drop below, especially even tomorrow is 39.90 for the S&P. On the next push higher, it's going to be interesting to see if we close above 40.95 tomorrow. But the target we did, as I said, hit the other side of the rotation zone. Cycle's now getting to the top, not over bought yet on the daily, but if we do push up, I'm really going to focus on this 40.95 level tomorrow. And tomorrow we could be choppier in the day session. We'll review that pre-market to see if there's more information. Nasdaq, again, coming up to this trend line, to the first target on the double and pausing out there. Little areas on the Nasdaq I'm watching as a return. First key area is about 12,180. And then the bigger pullback area, which would be the prior breakdown out zone in the 4 hour rotation zone, is 12,072. But statistically now favoring the move to, again, close above 62.5, and the first target of the double is hit. So it still favors higher prices, not necessarily tomorrow, but over the next few days going in with month end. We got 12,441 to 12,455, the harmonic and the double target, and the 87.5% retracement harmonic, and then 12,546 to 12,574. Dow, we now need to reverse these because we've made a new swing high. Dow did close above here, and this is also a great place to use your reverse harmonics because we don't have a strong pause yet. So this is the pausing area. So on a rally tomorrow, my next major area is 32,946 to 32,995. Pullbacks on the Dow. Minor, I'm watching about 32,400, and then major, I'm coming back down to about 32,200. Russell, again, I'll have to reverse these later, but Russell did not, on the daily, came up but did not trigger, and I was watching for a daily trigger on that double. Did not trigger it on the daily, only triggered it on the 4 hour, and it is extra sloppy. But if we do rally, I'm watching for a potential return to 1893 to 1898. Not really expecting that much. Crude, as I talked about this morning, we finally got that breakout play. Here was this key area. I talked about this 1170, 1180 area. Finally, momentum through it, running back up. Little potential topping pattern, but nothing going on there yet. I'm expecting still crude. Now the resistance would be support 111.75. I'm not even watching back that far. I'm about 113.40, and I'm watching for the next target area of 115.60. And we already covered those other targets. Notes, pausing here. Expecting after a pause here, we connected with the 50-day. Pullback area is now 120.02, but then I'm expecting the run to 121.07. Dollar index still just holding here, still expecting the breakdown to hit the lower target there. VIX coming off slightly, breaking down below that level I told you today, and it's going to be interesting to watch this tomorrow if it can get back down to 26. Tesla, massive stuff in options today that we haven't seen for a few weeks. Coming up intraday, we had the double, first filling the gap. We talked about that this morning, then running through there and hitting that first target on the double, 709.53, and essentially closing right below that. So your next targets up there are 726 and 739. Only thing is it's between the 50 and the 62.5. So I will be watching in case we do set up a topping pattern here. Just a little flag pullback pattern that I'm going to be watching tomorrow on the open to see where that stands. What was your question, Amit? Here, you had another question I saw on Like, to use Tesla as an example, as the double targets get hit in certain retracement levels, hitting upping stops, how would you update your levels, update the retracements? There's a few different ways you can do it. Now, moving up stops on this, the easiest way to look about it is just start going up with your retracement harmonics. Because this could easily still pull back to the breakout zone with the rising 1 hour rotation zone and still be in the double pattern. Where would my stop I want out would be at this 657 area, but I get really concerned at 670. But I wouldn't exit there. My complete stop would be here because a double stop has to be way lower to begin with, but that would be the stop that would invalidate it if you want the simple strategy. So, where else do we sit? Any other questions before can you check CAL? I'm shorting it. Hey, Waka Waka, since we went through 12,100, what's your new revised trading plan? Cal. Let's just see. I'm just taking a look here. Ooh. You're shorting it. Okay. I mean, realistically, if I don't have a topping pattern, yeah, maybe I'd take that back. There is a little topping pattern. I take that back. There we go. So below this low of 2704, your full target would just be back to the rising 1 hour rotation zone, but the intermediate targets, you have 2650, 2623, and you have a cluster there, which would be a really nice area. That's the first targets, and then your major, if this were to break down substantially, which I don't have a major topping pattern yet. So that's, if you did drop 026, I'd be using 2508. But this, that's really about it on that one. And this would just take you back to the breakout zone. So I mean, that's a very aggressive short. So I'd manage that one tightly from my personal perspective. I don't trade CAL. All right. You guys are really going with all this pie and ice cream. Wow. Netflix. Then I'm going to wrap it up today. Netflix. If you follow through tomorrow, I'd just be targeting 196 area. You're still going into the daily rotation zone, this most recent swing high, and then my next target would be 200. And definitely 200 would be, for me, taking something off the table if from a long perspective and raising up a stop. That would definitely be taking off something off the table there. Especially it could if get another rollover move. You're welcome, Michael. You're welcome, Amit. Glad to be here. What's your plan? My plan is that we pull back lower one more time to make a higher low and produce a head and shoulder on the 3 hour. This would then break out. So now what's your next price target to the upside, Waka Waka? Bob made me hungry. I'm cooking for my wife tonight at a restaurant, so need to go. Thank you for being here, Patrick. NAS will close the rotation zone on the daily chart. NAS will close the rotation zone. The rotation zone is right now sitting about 12,445. I am expecting that, and I'm also expecting it to hit this next target on the double. Not necessarily tomorrow, but by next week, by probably Tuesday, I'm expecting it to pop up there. All right. With that, thank you everyone for being here. I hope everyone has a very wonderful evening. Again, PCE out at 7:30 Central tomorrow. I will be on at 8, and then we will take it from there. So 11,950, then 12,250, and then to the moon. That means that you better get long so you can upgrade your cardboard box again, Waka Waka. You heard it straight from Waka Waka. That's his trading plan. 12,250. All right, we'll see. You are welcome, Ramsafal. I know you had another comment earlier. You had something with steal your face right off your head. Thank you for the dead stuff. Max target 13K. All right. Max target 13K and then back to reality. So 13K. That would be interesting. We shall see. Thank you, everyone, for sharing their thoughts. With that, I'm going to wrap it up for now. Again, thank you, George. Thank you, Rich. Thank you, Waka Waka. Thank you, Ramsafal. Thank you, Amit. Thank you, everybody else. I will talk to you later.